Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 3-1 question number 3. So this is the structured paper 3 which consists of 3 questions and all of them will be of 25 marks, and we're also given a total time limit of 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question under 30 minutes. So without any further delay, let's get started. The director of W Limited, a manufacturing company, have provided the following information for the year ended 31st December 2022. Alright, we're given various information regarding our costs. Now we're also given additional information. W Limited maintained a provision for unrealized profit account. So provision for unrealized profit is created so that the value that we added in our cost of production as a markup can be subtracted from our inventory of finished goods, because remember that the closing inventory is just the goods we have not sold yet, which means that we cannot be including profit. We need to value it at a cost. That's why we prepare a provision for unrealized profit account. Now at 31st December 2021, so this is of last year because the current year is 31st December 2022. The finished goods were transferred to the trading section of the statement of profit or loss at a cost plus 20%. So this is the markup used last year, which means that this is still the markup to be used for our opening inventory. Then at 31st December 2022, finished goods were transferred from the manufacturing account to the trading section of the statement of profit or loss at a transfer value of 632,400. So this is the transfer value for our cost of production for the year ended 31st December 2022. They were also given information regarding inventories. These were valued at cost on 31st December 2022, which means that these do not include our profit. Then rent of 6,000 was accrued on 31st December 2022. So we need to add it to the rent. So we have rent and rates right here. That's 74,000. We need to add extra 6,000. So that gives a total of 80,000. That's our total rent and rates. Now, rent and rates are to be split between the factory overheads, administrative expenses, and selling and distribution costs in the ratio of 5:2:3 respectively. Okay, so we need to split this 80,000 in factory overheads, administrative expenses, and selling and distribution cost. Okay, and the ratio was 5:3:2. So for factory overheads, that is just going to be the total of our rent and rates of 80,000 multiplied by 5, and the total is just 5 plus 3 plus 2, which is 10. So 5 out of 10 parts belongs to factory overheads. That gives the cost of rent and rates to be apportioned towards factory overheads to have the value of 40,000. Now, okay, the ratio is actually 5:2:3. So 2 parts is for the administrative expenses. So that is just going to be 80,000 multiplied by 2 divided by 10, which results in the value of 16,000. And for selling and distribution costs, that is just going to be 80,000 multiplied by 3 out of 10 parts, which results in the value of 24,000. Alright, so these are the values for rent and rates that we need to apportion towards our 3 different headings. Then we're also given information regarding depreciation. So depreciation is to be provided as follows. So for factory machinery, that is to be 15% per annum using the reducing balance method. So let's figure it out. So start with factory machinery. And that's 15%. And the basis is our reducing balance method, which means that we first need to figure out our net book value. And the net book value is just the difference between cost and our provision for depreciation. So we're given the cost for factory machinery to be 144,000, and the provision for depreciation, which is the accumulated depreciation, is 84,000. So our net book value is just going to be 144,000 minus 84,000, and the rate is just 15%. And this gives the depreciation on factory machinery to have the value of 9,000. Okay. Now for office equipment, that is 15% per annum using the reducing balance method, which means that we just need to repeat the same process again for office equipment. Okay, we're given the cost for office equipment to be 66,000. Then we need to subtract the provision for depreciation, which is 32,000. And we just need to multiply it by the rate of 15%. And this results in the depreciation on office equipment to have the value of 5,100. Okay, so we're done with this, and this, and this. Now for delivery van, the depreciation rate is 20% and it is based on straight line method. So we can just apply this rate of 20% to our cost. So the depreciation for delivery van is just going to be 48,000, that's the cost, multiplied by 20%. And this gives the depreciation on delivery van to have the value of 9,600. Okay, we're done with this as well. Now let's have a look at our first question. We need to explain why a manufacturing business may provide for unrealized profit. So I have actually said the reason regarding this. This is because we include our markup in our cost of production to figure out the transfer value. And this transfer value is then moved towards our statement of profit or loss. But remember that our closing inventory is something that we have not sold yet, which means that we cannot realize profit on that item. We can only include our inventory at cost, which is why a manufacturing business may provide for unrealized profit. Let's write it down. The unrealized profit is to be deducted from the transfer value to value the inventory at cost. And this is done according to prudence concept, because under that concept we cannot really overvalue our assets and profit. So which is consistent with the prudence concept. Alright, that's all for the first part of this question. Let's move towards the second one. We now need to prepare the manufacturing account for the year ended 31st December 2022. So this is the manufacturing account. And this is for the year ended 31st December 2022. Alright. So whenever preparing manufacturing account, the first thing that we need to do is figure out the cost of raw materials consumed in the production process. And for that, we need to start with our opening inventory of raw materials. Then we add all of the purchases made for the raw materials. Then we also add all of the carriage inwards, which is basically the cost that was associated with bringing in the raw materials into our factory. And then we just subtract our closing raw materials inventory. Alright, so we are given the opening inventory right here, that's 8,000. We'll include this. Then we're also given purchases of raw materials to be 198,000. We need to add it. Then we also have carriage inwards. So this is basically the cost associated with bringing in those raw materials into our factory. We need to add this 3,100 as well. And we were given the information regarding closing inventory right here. So we have raw materials to be 10,500. This is the amount that we need to deduct in order to figure out our cost of raw materials consumed. Let's write it down. We start with opening raw material inventory. We add the value to be 8,000. Then we add our purchases of raw material. And we're given its value to be 198,000. Then we also add the carriage inwards. We were given its value to be 3,100. And then we finally subtract our closing raw material inventory. And we were given its value to be 10,500. Now we just add these four amounts in order to figure out our cost of raw materials consumed. So that's just going to be 8,000 plus 198,000 plus 3,100 minus 10,500, which results in 198,600. We now need to figure out our prime cost. And remember that prime cost is just the sum of all of our direct costs. And the first direct cost is the cost associated with raw materials, and the next direct cost is going to be the cost of labor. Let's have a look above. So we're given direct labor right here. Let's look for any other direct cost. So that's all. So we just need to include this 164,000 to the cost of raw materials in order to figure out our prime cost. Let's do that. we have our direct labor, which is given to be 164,000. Now we can add these two in order to figure out our prime cost. That is just going to be 198,600 plus 164,000, which is also in 362,600. All right. Now the next step would be to add all of our factory overheads. Let's have a look above. Okay, we can see that we're given factory overheads right here, which is given to be 98,000. And also remember that we need to add the cost of our rent and rates, which was a portion towards our factory overhead. So that's 40,000. So we need to include 98,000 plus 40,000. Let's write it down. That will be our factory overheads. We have 98,000 plus 40,000, which results in the value of 138,000. And also remember that we figured out the depreciation cost for our factory machinery. This is to be included within our manufacturing account. So we need to include this 9,000 as our depreciation on factory machinery. So we have depreciation on factory machinery, and that's of 9,000. Okay, I don't think we're given any other factory overheads. Yeah, that's all. So we can just figure out the total of prime cost and factory overheads. That's going to be the sum of these 3 months. So that's 362,600 plus 138,000 plus 9,000, which results in 509,600. Now the next step would be to adjust for our inventory of work in progress. So always remember that we add our opening work in progress inventory. And then we need to subtract our closing work in progress inventory. Because these are not yet finished goods, which means that we cannot really transfer it to our statement of profit or loss, but we do need to include it in our manufacturing account. All right, so for the opening inventory of work in progress, that's given to be 17,300, and for the closing one, it's 16,900. Let's write it down. So we need to add 17,300 and subtract 16,900. Now this will finally give our cost of production or cost of goods manufactured. Now that's going to be the sum of these 3 months. So that's 509,600 plus 17,300 minus 16,900, which results in 510,000. Now always remember that we need to figure out a transfer value to be included in our statement of profit or loss. And for that, we just need to add factory profit to our cost of goods. And then we add these two in order to figure out our transfer value. But in this case, we're not given any sort of information regarding the markup, but we are given the transfer value itself. And it was 632,400. Now we can easily figure out the factory profit because that is just the cost plus factory profit equals to transfer value. We have the cost to be 510,000. We're trying to figure out the factory profit, and we have the transfer value to be 632,400, which means that our factory profit is just going to be 632,400 minus 510,000, which results in the value of 122,400. All right, this completes our manufacturing account as well as the second part of this question. So let's move towards the third one. We now need to prepare the statement of profit or loss for the year ended 31st December 2022. Let's create the statement of profit or loss, and this is also for the year ended 31st December 2022. All right, always remember that for statement of profit or loss, we start with our revenue, and we were given revenue in the information above. Right here, we can see that the revenue is 984,000. Now the next step would be to subtract our cost of sales. And cost of sales will be similar to the statement of profit or loss that we had been preparing before, but for manufacturing account, instead of including just the inventory, we need to include the finished goods inventory. So we start with our opening finished goods inventory, and in place of purchases we include our transfer value, because in cases where we included purchases, we were referring to the businesses that purchase goods for resale, but in this particular case we are producing our own goods, which means that we need to include the transfer value that we figured out from creating our manufacturing account. So the next step would be to add our transfer value, and then finally we just subtract the closing finished goods inventory. Now the thing that you need to remember in this case is that the opening inventory as well as the closing inventory need to include the markup or our profit. All right, so we have already figured out transfer value. Let's write it down. That's 632,400. Now for opening inventory, let's have a look above. So we're given finished goods inventory right here, but remember that this is at cost. And like I said before, we need to include the inventory with a markup. And we're also given information regarding 31st December 2021, where the markup was 20%. So in order to figure out the value that we need to include in our statement of profit or loss, we just need to increase this value of 45,000 by 20%, because that 20% will refer to the profit. Let's find it out. So that's 45,000. We just need to increase it by 20%. So we're going to multiply it by 1 plus 20%. And this gives the value of finished goods to be included in our statement of profit or loss to have the value of 54,000. Let's write it down. Now for closing finished goods inventory, we need to figure it out in a similar manner. So we're given the finished goods to be 52,000, but again remember that this is at cost. And we are not given the rate of markup in this case, which means that we first need to figure out the rate of markup. Markup is just a percentage of the cost. So in this case, our markup is just going to be the profit, which is 122,400, divided by the cost, which is 510,000. And we can just multiply it by 100% in order to figure out the markup rate. And this gives the markup rate to be 24%, which means that we need to increase the value given above by 24% in order to figure out the value that needs to be included in our statement of profit or loss. So that is just 52,000 multiplied by 1 plus 24%. And this gives the value of closing finished goods inventory to be 64,480. This is the value that we need to include in our statement of profit or loss. So that is 64,480. Okay, let's figure out the total for cost of sales. That is just going to be 54,000 plus 632,400 minus 64,480, which results in 621,920. We now need to subtract the cost of sales from revenue in order to figure out our gross profit. So that is just going to be 984,000 minus 621,920, which results in 362,080. Okay. Now the next step would be to adjust for our unrealized profit. So we just need to add our factory profit to it. And factory profit, we already have it in our manufacturing account to be 122,400. And we are adding it again, because remember that we basically subtracted it the transfer value under our cost of sales, which means that we also subtracted the factory profit, but profit should always be added, so we're just trying to reverse that. Then the next thing would be to compare the provision for unrealized profit for our opening inventory and the closing inventory. So for opening inventory, the provision is just going to be the difference between its cost and the value included in our statement of profit or loss. So that is just going to be 54,000, which is the value included in statement of profit or loss, minus 45,000, which is the cost. And this gives our provision for unrealized profit for opening inventory to have the value of 9,000. Now we repeat the same process for closing inventory. So the provision is just going to be 64,480, which is the value included in our statement of profit or loss, minus 52,000, which is the cost. And this results in the value of 12,480. Now the next step would be to see whether there has been an increase in the provision or a decrease in the provision. So we can clearly see that the opening inventory had the provision of 9,000, but the closing has the provision of 12,480. So there is definitely an increase. So let's figure out the value of increase in provision. That is just going to be the difference between these two values. So that's 12,480 minus 9,000, which results in the value of 3,480. And always remember that the increase in provision for unrealized profit is to be treated as an expense, which means that we need to subtract this value in our income statement or the statement of profit or loss. But if there were a decrement, we should have treated it as an income, which means that we should have added that amount. Let's write it down. So we're just subtracting 3,480. Let's figure out the total. That's 122,400 minus 3,480, which results in 118,920. Now, the next step would be to add our gross profit to this factory profit adjustment. So that's 362,080 plus 118,920, which results in 481,000. So this is basically our total profit or gross profit plus the factory profit. Now we just need to subtract all of our overheads so that we can figure out our profit for the year. And remember that the overheads are categorized into two headings. The first one is administrative expenses. And the second one is selling and distribution costs. So we first need to figure out the total for these two headings. Let's have a look above. Alright, so let's start with administrative expenses. It's right here. We start with this amount of 223,500. Then we are also told that we need to include 16,000 as part of rent and rates in our administrative expenses. So we need to add the 16,000. Okay, and then we have also figured out the depreciation on office equipment to be 5,100. And office equipment, any expenses relating to it should be contributed towards our administrative expenses. So we're just adding this depreciation into the administrative expenses as well. Okay, and that's all that we need to include in administrative expenses. So let's figure out the total. That is just 223,500 plus 16,000 plus 5,100, which results in 244,600. Let's figure out the value for our selling and distribution costs as well. We start with the value given right here. That's 84,000. Then also remember that we need to include 24,000 as rent and rates within our selling and distribution costs. So we add the 24,000. Then also remember that we are given carriage outwards, and this is something that is related to transferring the goods from our factory to the customer's place. So this is definitely under our selling and distribution costs. We need to add the 6,200 as well. And also remember that we figure out the depreciation on delivery van. And delivery van is used to transfer the goods from our factory to the customer's place, which is basically our selling and distribution cost. So we need to include this depreciation under the same heading as well. So that's 9,600. Okay, we have included this as well. We've included this. We had done all our workings for inventories. We included rent as well as the depreciation. So I think that's all for the selling and distribution costs as well. Let's figure out the total. That's 84,000 plus 24,000 plus 6,200 plus 9,600, which results in 123,800. So let's include these two amounts in our statement of profit or loss. For administrative expenses, that was 244,600. We need to subtract it. And for selling and distribution costs, it was 123,800. Again, we need to subtract it. Now we can get our profit for the year by adding these 3 months. So that's 481,000 minus 244,600 minus 123,800, which results in 112,600. This is our profit for the year. This completes our statement of profit or loss as well as the third part of this question. So let's move towards the fourth one. We're given additional information. The financial statements of W Limited for the year ended 31st December 2022 are ready to be audited, and we now need to explain the importance of a true and fair view opinion in the auditor's report. So the importance of a true and fair view opinion, the main reason for it is that the financial statements should be credible and reliable. Let's write it down. The financial statements should be credible and reliable, because it is the duty of the company to present with correct information towards all of its stakeholders. Then the second importance of the fair view opinion in the auditor's report is so that the auditors verify that the accounting policies adopted by the business are appropriate. Let's write it down. The accounting policies adopted by the business are appropriate. And the next importance is that appointing an auditor is actually complied with the legal requirements as well as the accounting standards. So let's write it down. The financial statements have complied with the legal requirements and accounting standards. Alright, this completes the fourth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.